What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to dive deep into the charts and analyze some key harmonic patterns that are shaping up right now. Plus, we're going to discuss what to expect in the week ahead with initial jobs claims and the ISM manufacturing PMI. So two critical data points that could potentially move the markets in this short week, since we will be closed on Wednesday because of New Year's Day. So before we get into the analysis, I'm just going to briefly explain the data that comes out this week. So first up, initial jobless claims. This is going to give us a snapshot of the labor market's health. It shows us how many people are filing for unemployment benefits. So it's a key indicator of economic strength or weakness, and it's what the Fed is watching very closely at this moment. Meanwhile, the ISM manufacturing PMI, this measures activity in the manufacturing sector. So a reading above 50 signals growth, while below 50 points could mean contraction. So it's closely watched for signs of economic expansion or slowdown. So if you're serious about learning harmonic technical analysis and want to stay ahead of the market moves, make sure to subscribe to the channel, hit that like button, and drop a comment below with your thoughts or questions. But before we jump into those charts, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. So starting us off here with SPY. So SPY looked a little bit bullish during the week. Last week, we did start to push up after the FOMC initial sell-off. We did reclaim some of these levels. We actually got close above 600, and ultimately on Friday we did open a little bit bearish, closing the day at a negative 1.05 for the day, closing SPY below 595.01. So what can we expect here harmonically? We're still tracking the ABCD pattern here. I think, in my opinion, this is an important one to watch. We are also forming here a potential head and shoulders pattern here for the SPY. So if I zoom over here a little bit closer, you can see that this part right here is the left shoulder. I think a lot of people are tracking this right now as well, and we are now in the right shoulder, potentially coming back down to where we have that neckline, and you can see where that neckline is kind of at hop at 584.41. So that is the level to watch out for SPY in case it does break that neckline. You can see more downwards action here for SPY. One of the things I am going to be paying attention to is the 50 EMA SMA. This has held support quite well. You did come below it after FOMC and then reclaim it, but right now you're kind of double bottom over here. Maybe you do come back to hop, but that's a level I'd be watching out for. In the event you'd lose 584.41, the next level I'd be looking to the downside would be 580. You do have a gap to fill towards 576.74, right where the 575.88 target is at on the ABCD pattern. Below that, then you obviously start the type 1 reaction. Next levels to the downside would be 562, 559, and then you have the 200 EMA SMA touch there around 552, and the completion of the pattern for a type 1 reaction will be target 1 at 547.85. So one thing to note is the market, like I said last week, did start to look a bit bullish, kind of recovering almost everything it lost during FOMC. And on Friday, we had no reason for the market, at least that I could find, why we opened down the way we did. It could be because of tax loss harvesting. We know that tax loss harvesting last year, you had to, for that to take effect, he had to sell 2 days prior to the 31st, which would be a 2+2 day. Now that the whole system has changed with the settlement day being T+1, you could have started to see that tax loss harvesting sell-off happen already on Friday. We still don't know. There was high amount of volume selling. We also have obviously end of month expiration. So that could also have been a reason why we sold off on Friday. But that would be the key level to watch. If SPY manages to hold support above the 50 SMA, the next level I would be looking back up is to reclaim the $600 range and close the gap there at 598.08. Above that target, I do have 602.48, and ultimately for me, 604.61 would be very bullish for a potential retest of the previous all-time high and making a new all-time high at 610.25. So it's going to be very important to see what happens here on Monday. We do have, like I said, a short week with Wednesday being closed because of New Year's Day. So we're going to see what the market brings for us, at least Monday and Tuesday, in terms of support above the 50. You're looking, in my opinion, harmonically to go along above 604. Below where this current range is at, you're looking more towards that 584 to see if it holds support. So definitely keep a close eye on SPY. Jumping over to the triple Qs here. So the triple Qs had a negative 1.33% on Friday, closed at 522.56. So what can we expect here harmonically? We do have this bearish butterfly on the daily that did form. And as you could tell from this all-time high to swing low after FOMC, you retraced about 618, so the 61.8% wave there. And then you came back down on Friday. Obviously, you lost XA with high amount of volume. So what can we expect here? Similar to the SPY, I'm going to be watching out on the triple Qs, the SMA, the 50 SMA, which is around 511 and 509 and change. I bring up my drawings here. That's the level I'm going to be watching out for. If, unlike SPY here, the triple Qs has actually held support above the 50 SMA, hasn't really come down to test it all the way since back in September. So, and that's the next level I'm going to be watching out for. If you lose a 9 EMA here, excuse me, the 21 EMA here around 521, the next level I'm going to be looking for the triple Qs is going to be that 510 target. Below that, I do have a target at 503.52, and obviously with increased amount of selling is what I'm going to be paying attention to. If that happens to be the case, then you might be starting that potential type 1 reaction from that bearish butterfly pattern towards target 1, which is calling for 87.27. Right now I'm watching also the HSI. You can see that it tried to get above it towards Friday, but ultimately we did open bearish in the market on Friday, and you rejected below the HSI midline. So if this decides to come back down to the oversold conditions, you can start seeing that towards the 50 SMA, maybe even all the way down to 503.52. To the upside here, if you manage to hold support and break above that midline, the HSI midline on the daily, the next level you want to reclaim would be XA again, 525.14. Above that, then the next level I'm looking at would be HOP at 537.15, basically previous all-time highs. So obviously one thing that I'm going to be looking at also for potentially here, I know we had Friday's volume coming out of nowhere. Really couldn't find anything, like I said, on the SPY why the market dropped the way it did on Friday. Ultimately, I made a conclusion on myself. I still could be wrong. This is just what my opinion. It could have been early tax loss harvesting. One thing to note here is that triple Qs here is starting to have an M formation, right? So in harmonics, we got a 5-point structure. You'd come back down. An M formation in harmonic would be a bullish harmonic pattern that could potentially be forming, in which case you'd be looking for upside again. So that's obviously unclear yet. We still have to, in case that is a harmonic pattern that is pending or potentially forming, you still would have to make the leg point D down, come back down, and see where it finds support to make up whatever pattern is forming. So obviously going to be watching out for some of these key levels, that 50 EMA, SMA. If there is more downwards action is what I'm going to be closing. I'll keep a close eye on it. So definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones, if we're looking at the three indices here, you can see that it clearly lost a 50 SMA, and it's actually having a hard time now as resistance to get above it. You did have some nice volume come up here towards that 50, ultimately got rejected, and now potentially coming back down with high amount of selling that happened on Friday. The HSI did cross that midline. It looked good. Volume started to look good, but ultimately Friday came with high volume selling and a rejection there below the 50 SMA. So what can we expect here on the Dow Jones? The next targets I'd be looking at would be 547.29 and then 423.97. Below that, I do have a target at 420.72. Losing that level, you can come back for the White Swan PT3 target there at 409.03, where the 200 EMA and SMA are at. Targets to the upside, the next level, in my opinion, you need to break above for the Dow Jones to get some bullish momentum, is to reclaim 435.73. If we take a fib ratio here, fib retracement from the most previous all-time highs to where we found a bottom here during FOMC, you can see that it tried to reclaim the 382, closed above the 382, but ultimately is having some resistance there. In my opinion, if you're going to break this most recent swing high to swing low downtrend, you have to get above at least minimum the 50% retracement, and in the best case scenario above the 618, which would flip the momentum back bullish for the Dow Jones. So obviously it's having some resistance here. We'll see if there is more continuation to the downside here for the Dow Jones. So definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So the Russell 2000, similar charts to the Dow Jones here. Both of these indices did have a lot of selling that occurred in the past 2-3 weeks here. High amounts of volume selling. You had this bearish butterfly pattern on IWM where you met HOP, found resistance, and you came all the way down for a type 1 reaction towards target 1. You actually lost target 1 on Friday. So the next levels I'd be watching out for with this harmonic pattern to see if it doesn't reclaim target 1 minimum, then you're going to maybe come down here for the full completion at target 2, where you also do have a gap to fill there around 208.41. T2 is at 212.61, which would be ultimately a close below the 200 SMA. You can see that it did cross on Thursday. The HSI did try to get bullish and cross above that, but ultimately Friday we got stopped underneath the 9 EMA, and you do have that 2050 crossover strategy here. Obviously, those could be lagging indicators. Maybe that already had taken place. With this sell-off, we still not clear. So that's one thing I'm going to be watching out for. Ultimately, you could also argue that this is a potential inverse cup and handle, and if that pattern plays out, you have quite the retracement or quite the levels to watch out for to the downside, which could be ultimately close to $200 on the Russell 2000. Obviously, we are not there yet, but there is that scenario, and it would give more confluence for that bearish butterfly pattern. Obviously, you would lose way below target 2. If we go over here to the weekly, you can see that it does have a bat pattern as well as a white swan pattern. You can see high amount of selling. Obviously, we had FOMC, that's why you had high volume and all that good stuff. So you did lose a 21 EMA on the Russell 2000 here. So that's 2 weeks that you close below the 21 EMA, and the next level to watch out for based on this pattern here would be target 1, PT1 at 214.39. Below that, you actually have the target 1 there at 211.55, which is that bearish bat pattern on the weekly to complete that full type 1 reaction. If we pay attention to the HSI here, you can see it crossed below, and if it decides to go to the extreme oversold conditions, I could see this maybe going down towards 50 EMA, SMA there around target 1, where there is that gap to fill. Or even more so, if it gets really bearish to the extreme, you might be going to PT2 there at 205.58, which would give confluence to that 2050 crossover strategy to the downside, as well as that potential inverse cup and handle that is potentially forming there on the daily. So this is the HSI dot retest line there, and what you should be watching out for if there is more downwards action here. First level, watch out to 11, and then the HSI dot retest line where PT2 is at 205.58. Obviously, this is on the weekly time frame, so it could take a little bit of time to play out, but those are the levels I'd be looking out to the downside. If we are finding support here at T1, levels to the upside, what you want to reclaim for the Russell 2000 is to hold above T1. There is going to be quite the resistance to reclaim some of these levels here, but the next level you want to at least get above is 227. Get above that 50 SMA around 230, and then ultimately BC at 232, and then you can start seeing bullish momentum. If we take a fib retracement from the previous 52-week high to that low, you can see the momentum will shift bullish if you can at least get between that zone, that 50 and the 618. So 618 would be obviously a 61.8 retracement from the swing high to swing low here, the most recent swing high to swing low, in which case you could be invalidating that momentum and going back bullish. So above 234 you could go bullish, but right now you're not even anywhere close to that zone, so there is going to be quite the resistance up in these levels. So definitely keep a close eye out on the Russell 2000. Jumping over to XLF here, so the financial sector ETF currently has this bearish white swan pattern on the daily. When you form that HSI arrow to the downside here, you can see you had a bearish reaction with increase in volume that obviously came before even FOMC, but during FOMC it accelerated that move where it did lose OPR, and it came down all the way down below CD there at 47.81, and then you had the bullish reversal with an HSI arrow coming back up, but you are now having a bit of resistance here around the OPR level there at 49.01, where you got rejected at the 21 EMA. So what can we expect here harmonically for XLF if there's more continuation here to the downside? One thing I want to point out before I tell you these targets here, you could argue that this already had its head and shoulders pattern here. You can see that neckline is towards around this area, and you actually played out that head and shoulders. So are we starting to see here some of those ETFs already playing out their head and shoulders, and could be suggesting that maybe SPY Qs is also going to be doing the same thing? Obviously that's still too early to tell, because we are forming a head and shoulder pattern on the daily for SPY. So these ETFs have already had their head and shoulders and already had their downwards movement. XLF, you had AWM, the Dow Jones. So it's obviously too early to tell, but it's still, something to consider. So the next level is to the downside for XLF. Is going to watch out for the 47.81. If you fill that level, then you have that gap to fill all the way to 46.73. When you had that whole movement to the downside off the head and shoulders NFOMC, you actually had quite the gap here on the financial sector on some of these banks, and you are now halfway through filling them. So below that, obviously, you come down all the way to 46.12 after filling that gap, and then you do have PT2 there at 45.07. The HSI is curling down. It was having some nice momentum to the upside. Obviously, on Friday, it kind of stopped that momentum. We'll see if it's going to curl down. So if it does curl down and it goes to that HSI midline test, I am guessing it's going to be towards that 47.81, maybe even the entrance of the gap again there at 47.59. Target to the upside, if it does find support above the 50 SMA, next level to reclaim is at OPR, like I said, where the 21 EMA is at around 49.01. Above that, then you have that HSI dot retest line at 49.84, and break above that, then you can start maybe seeing a test of the previous all-time highs. But if we take a fair retracement here, again, the retracement, as you can see, what the pattern is so far from the most recent all-time highs to the retracement that we have after FOMC. Most of the retracements have just been up to 382, which is considered the extreme case, in which case if it fails and you start, this would be the first impulse wave corrected move. You could start a second impulse wave. A second impulse wave would have to make a lower low. So obviously it is rejecting at the 382. So we're going to see if there is more downside and volume starts to pick up. So one of the things, like I've said, is volume to watch out. The banks are starting to look a little bit bearish. They have been looking a little bit bearish. We'll see if there's more downside in the bank. So definitely keep a close eye out on XLF. Jumping over to XLE here. So XLE, no current harmonic pattern that is forming. One of the levels I did have drawn out there previous videos is 82.51, where it came down to 82.75. You did have that death cross on the daily form and also on the EMA. So we're going to see if there's more continuation to the downside here on XLE, because if you do come down and lose at 82.51, you could be seeing the ETF go towards that 80 and maybe even further. There is quite the gap to fill there around 73. I know there's a lot of geopolitical issues going on right now, especially with Putin saying that they're going to slow down the production, I believe, of oil in Europe. So you know, this is getting very volatile here. The energy sector has been selling off for now 4 weeks with increase in volume. We're going to see this level. You can see every time it comes down to those levels to find support, it does come back below it, and ultimately, like over here, it came down to that HSI dot retest line around 75. So that gives confidence towards that potential gap fill, right, towards that 73, maybe the entrance of it. Or maybe it does lose it. Who knows? The 200 SMA and EMA are right above around 79 and 77. So targets to watch out for just based off of just previous levels here would be 82.51. Lose that, maybe you can come down to that $80 range where the 200 EMA is at. Below that, then 200 SMA is at 77, and then that HSI dot retest line that tends to hold support. Below that, then you potentially start that reaction towards T1. 67.27. The HSI is almost completely oversold, still has a little bit of more room to the downside before you even start looking for a potential reversal. But just because it gets to the at least the oversold conditions on the HSI does not mean it cannot get any lower to the extreme. If that is the extreme, I believe that's going to be towards that HSI dot retest line. Obviously too early to tell. Targets to the upside you need to reclaim here, you need to hold is 82.51, get back towards that 90. The HSI dot retest line on the weekly is 92.29, and then maybe you could see a potential, if you call this like an information double top there, maybe triple top, quadruple top. It's just, you know, the levels to watch out here at 97 and 96. So a lot of geopolitical issues going on here with the the energy sector. So that's one thing to note here, because right now the retracement that you did generate here kind of short-lived, and not even the three. I don't think it's at the 382. It's just below the 236. So still a bit bearish here on the energy sector. So keep a close eye on it. Jumping over to Apple here. So Apple has been going on quite the run the past. Ever since it broke above the HSI dot retest line since late November here, has just been going on an insane run, and finally hit some resistance there on Thursday. And on Friday, you did generate an HSI dot here. So what can we expect harmonically? We don't have any harmonic pattern forming on any of the larger time frames. So the next level I'm just going to be looking at here for Apple, if it continues to the downside, would be 248.48. That's roughly where you can see you could trade it up here for a little bit, and then it broke above. Came down for that retest, held support above that level, and then it pushed to that new all-time high just recently made. So it looks like it may be going down towards there. 21 EMA there is also the same level that I do have here at 248.48. Below that, then you do have 242.22, and then back down to OPR at 238.09. Targets to the upside, if it finds support above the 9 EMA, usually it looks like it comes down more recently to the 13 EMA, which is around 251. If it finds support above that, you might see it come back up to test the previous all-time high, and ultimately I have a new all-time high at 262.71. You can see that the HSI did cross above the midline and then came down back below. So right now it's a little bit too hard to say where Apple is going, if it's going to retrace or if it's going to continue to consolidate here. You also had a shooting star, right, a regular hammer candle here on Apple to end the week, but obviously we know that there was a short week. So is it really going to be a shooting star here for a reversal? Ultimately, in technical analysis, that would be considered a potential reversal signal. So obviously too early to tell. The HSI on the weekly though is at that overbought condition, so you could be forming an HSI arrow to the downside, suggesting a reversal is incoming and giving confluence to potentially that the close on the weekly here, that reversal candle. So those are the targets I have. Not much to say about Apple right now, so we'll see what Apple has in store for us this week. So keep a close eye out on Apple. Jumping over to Microsoft here. So Microsoft currently has this bearish bat pattern on the daily. You can see it wanted to hop, lost hop, and came back below XA. You had an HSI dot retest line around 434.32, and you came down on Friday to touch T1 again at 426.91. So one of the things I've found for news as far as why the market may have dropped a little bit is we did get some OpenAI news. There was some investigation news there for OpenAI. So I'm not sure if that's the case, why the market maybe had some little bit bearish reaction. I'm not clear yet. I do still think my analysis there may could be due to tax loss harvesting, but you do have that situation for Microsoft continue bearish here based off the OpenAI news. So targets to the downside, if you lose T1 there where that 50 SMA is at, you have the 200 SMA at 424, and then target 2 again to 419.76, just slightly above the 200 EMA, where the 200 EMA is around 417 and change. The HSI, you did come down here to the oversold conditions here. You did try to form an HSI arrow, which you got on Thursday but failed. So now you have a potential 921 crossover that could potentially happen within the next few days, and if that is to play out to the downside, you could see maybe some more targets to the downside here towards that 419, maybe the 200 SMA. Targets to the upside, if Microsoft manages to stay above T1 here, the next level I'm going to be looking at would be at 433 and change, where that HSI dot retest line. If you're able to break above that, you can see next target would be XA at 438.01, hop there at 446.60, ultimately test the most recent highs there at 455, and then finally come towards that 468.35 there on Microsoft. So as you can see, I do have a resistance line there at 433.87, where you kind of just had that resistance line on Friday, and then you came down. So what's interesting is that horizontal line here I drew is also where the HSI dot retest line. And if we look at this from from the first simplest wave here, it would be first simplest wave, and this would be your corrective move. We could actually figure out if this is actually going to be creating higher highs and higher lows, and we will see where it retraced to. So it came down to the 618 and it found support, so that's good. What we want to see now here, if this is actually going to still keep the bullish momentum, creating higher highs and higher lows, we want support above here and ultimately make higher highs. In the event that it doesn't, you could start making maybe lower lows and lower highs. So we want Microsoft here, for that bullish case scenario to go long again, is for this to retrace and break this most recent drop here. So that's going to be towards that 444. So anywhere between 440 and 444, Microsoft could potentially make that second impulse wave, which would create that higher high down the line. So that's all I have for Microsoft. Really wanted to share just quickly the weekly here. The weekly, you do have that W formation here, and you are slightly above that HSI dot retest line on the weekly, which is around 431, 430. Below that, then you have the more the deeper retracement towards 413, where that 50 EMA is at. So we'll see what happens with Microsoft. Honestly, it looks to me like it's just consolidating right where you had that double top which formed here back in September and October, and you reclaimed that level. You broke bullishly above it, and you came down to test it. So it's going to be very important to see if this actually holds. Otherwise, if it doesn't, then we can see again this thing trade in this range again, right? This range over here. So that's where I'd be looking at. If it fails, then you come potentially back down to closer to that $400 range. And if you break above, then you're going to come back up to 457, maybe test the previous all-time highs and create new all-time highs. So definitely keep a close eye out on Microsoft. Jumping over to Amazon here. So Amazon on the daily currently has this bearish deep crab that did form last week here. And at the completion of the pattern, you see where it got rejected there at XA at 231.85. You came down to test a 21 EMA, held support, try to get above that HSI dot retest line where PT3 was at here from the Black Swan, and ultimately found resistance there. So two targets there, the HSI dot retest line and PT3 is now resistance. You came down on Friday to touch the 21 EMA, and so far you could be forming a W formation, which would obviously make the price go up towards that XA, potentially even closer to that hop at 253.27. Right now the HSI is below the midline. It looks like it is coming down, maybe to touch that oversold condition, in which case obviously you would come back to retest a level I have here at 214.69, roughly where there is a gap to fill at 214.02. So that obviously is if you lose a 21 EMA. You have that target there at 214.69. Below that, then you have the 50 SMA there at 211.88, and another gap to fill towards PT2 there at 208.20, roughly where the 50 SMA is at. So targets to the upside if this is actually going to hold the level of support here above the 21 EMA. So far, the 21 EMA most recently has been a level that it holds, and it continues pushing higher. So if it does find support here, the next level you want to break above would be PT3 there at 228.35. Above that, and you could expect the next target at 231.85 XA, and the previous all-time high there is at 233, and then maybe you come down for the you come up towards the hop level there at 253.27. If we go over to the weekly here really quick, you can see that you had a little bit of a topish candle there last week with high volume, and you did close below the previous candle. So the weekly is still a little too early to tell whether this is going to come back down or continue pushing up here. You could just be entering the consolidation phase here on Amazon, but ultimately right now the level to watch out for is the 21 EMA at 221. Below that you can start looking a little bit bearish towards that gap fill, and a break above 228 you could maybe get a little bit more bullish towards the previous all-time high. So definitely keep a close eye on Amazon. Jumping over to Tesla here. So Tesla, no current harmonic pattern forming on the daily. On Friday, it did close at 431.66, ultimately holding support above that 13 EMA noted by the orange line. So what can we expect here? One of the things I wanted to talk about first before I get to those targets is the amount of selling that it got after it tested the new all-time high there at 488.54. You did come down here on quite the volume down towards that 13 EMA and held support, right? One thing to note here is the anomaly here based on volume to price analysis. This candle that it got here on Tuesday to the upside, wider spread compared to the previous candle, which was on higher volume, right? Even these candles here, some of these candles are lower spread compared to this green candle. So that actually could have told you that this was actually a bull trap, and ultimately that's what happened on Thursday and Friday. You had actually increase in volume, and you actually lost all that momentum you got on Tuesday. So next level to watch out for, just based on the previous support levels here, is just that 13 EMA. You feel that, and I would think you come back down here to 411 and change, roughly where that 21 EMA is at. Below that, then obviously you have another gap to fill right at the 50 SMA. I know it's hard to see, but if you zoom in here, there is a gap to fill there at 358.10. So obviously that would happen based off of news. Maybe you have a potential M formation here as well, which would ultimately create a point D here to make that 5-point structure for a potential bullish reaction back up above to some targets here. On the On the daily here, targets to the upside that you want to reclaim is that HSI dot retest line, which is around 452. There is a gap to fill there around 451.02. Above that, then you have 463, and then I do have a new all-time high at 499.55, maybe just that psychological level at 500. If we jump over to the weekly, we do have a harmonic pattern. This is an ABCD pattern on the weekly, where you can see 2 weekly closes below the ABCD target there at 469.77. Obviously, you had this doji candle closing off of this most recent week, potentially signaling that reversal is coming, maybe a consolidation. Who knows? We still have to wait and see. This is obviously going to be on the longer time frame, which could take time to play out, but targets to the downside here to complete the type 1 reaction is calling for 319.69. If it holds support, then you're looking for a type 2 return towards hop. You have 469.77, and then hop here is calling for 517.69, which would obviously be a new all-time high. Right now the HSI is coming down. No indication yet whether it's coming down for that midline yet. We still have to wait and see. You could just be consolidating here up in this range, which would be fine for Tesla, especially since you continue pushing up here with no literally support until maybe right here, right? You have a high amount of buying here and selling, so you do have some support and resistance here, but ultimately this push back up here, the moment you lose this level, you could quickly come down the same way you pushed up pretty fast. So if it starts to establish here a range, maybe starting to establish a range for support in case, so that way it doesn't lose these levels pretty fast. So obviously we still have to wait and see if that is going to be the case. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google closed on Friday at 192.76. It did cross below the HSI midline here. We do have this bearish butterfly pattern on the daily. You did find support with the 13 EMA, so targets I'm going to be looking at here to the downside, if there's continuation to the downside, would be that 21 EMA, roughly just where hop is at, around 185.60. Below that, then you obviously have XA at 181.54. You have that gap to fill towards 176.26, right where the 50 SMA is at. Below that, then you would come back to test target 1 at 168.72, where the HSI dot retest line is and the 200 SMA is at. Obviously, you can see you had some bullish momentum on Google, and it actually reclaimed everything it lost on FOMC. It tried to stay above that 193.70 target, but ultimately closed on Friday and lost that level. So we're going to see if Google manages to find support above here, claim back 193.70, and above that, I do have a new all-time high there at 203.78. If we go over here to the weekly here really quick, you do have an ABCD pattern. I believe this is an ABCD pattern. Yep, this is an ABCD pattern where you can see you had that doji candle there on the weekly form after it tested hop, couldn't close above it, and now you have similar to how Tesla looks, right? You have two indecision candles here. You do have a target back down to 184.44, which would get confluence. So I believe that's the X between hop and XA there on the daily. So that's quite interesting to see if it maybe comes back down, get some liquidity, and then go back up towards that 197.59. Unless that doji candle is suggesting a reversal, you could be looking down the line. Now, obviously, it's going to take a while to play out if it does play out, but target 1 would be a type 1 reaction at 137.77 down the line, potentially. You also have that on the monthly target here as well. In the monthly time frame, you have that ABCD pattern where hop was resistance. So still looks bullish here on the monthly for Google. We'll see if it reclaims these levels to the upside, but you do have targets to hit to the downside as well. The HSI did cross the midline if it goes to the oversold conditions. I believe that's closer towards XA and where the entrance of the gap is at. Lose that level, you have the extreme case, and in my opinion, you could be potentially going to 168, but still, like I said, it's still too early to say. We're going to have to see if there's more continuation with volume to pick up this coming week. If not, and you get bullish volume, then you're looking for more upside for Google towards that $200 range. So definitely keep a close eye on Google. Jumping over to Meta here. So Meta on Friday did close at 599.81. It did struggle to get above that 21 EMA there and where the 90 EMA is at, so towards that $600 range, 604. So what can we expect here? We do still have this dragon pattern. Obviously, CD is the level of support that Meta has currently. Obviously, we're still not there yet. It did come back above OPR, did create new all-time highs, and ultimately after that retracement with FOMC and everything, you did come down towards that HSI dot retest line at 579. You did try to close above BC here, but Ultimately on Friday you did go all the way down for a retest of the 50 and managed to close above BC there at the 886 of the pattern at 598.23. So targets to the upside that here you'll be looking at for Meta here would be 614.22, the HSI dot retest line at 627, and obviously 638 down the line. If we go over here to the weekly here, you can see that we also have that white swan where you are holding above 577.71, and on the monthly still crossing that HSI midline. There is a target here that we could look to where potentially could go to here on Meta. If we draw the previous all-time high levels there, September 21 to the low there, the 1618 was 567, the 2618, if this is to continue, if market is still going to push up, I know this is down the line, I know it's crazy to say that right now, but that's going to be 263, 65 there for Meta if the market continues to find support and bullish momentum in the market. So obviously there's more targets that you could hit before we get to that 863, and we could draw that really quick. But most recent swing high to swing low, we would definitely want to see if it can get back above the 618 to shift that momentum bullish, which is going to be at 615. Above that, then you have the 1.272 at 654.46, and then 674.88, the 1618 of this most recent swing high to swing low. So we'll see what Meta has in store. You can get bearish to the downside if you lose CD there at 550.73, but that level tends to hold support. So the levels to watch out for the downside is going to be coming down below that 886 at 598, the HSI dot retest line at 580, then look towards 567, and then finally CD there at 550 down the line. The HSI is approaching that midline, which is roughly where that 90 EMA is at. Fill that level, then you can see targets towards HSI dot there on 580. Break above it, then you can see levels towards 625 and maybe even the previous all-time high. So definitely keep a close eye out on Meta. Jumping over to Netflix here. So Netflix, in my opinion, holding up pretty well compared to some of the blue chips, right? There's been a lot of good things that Netflix has been doing, in my opinion. I am still looking for upside here on Netflix, but that is only if it breaks above 921. I have 921.35 right now. The 21 EMA is holding as support. That's roughly around 901. So what can we expect here? No current harmonic pattern forming on the daily. Obviously we still have that monthly harmonic that we're tracking, but the 21 EMA should hold if you want more upside on Netflix. In the event that it doesn't hold here on the daily, the 21 EMA, then the next level I'm going to be looking at would be that 50 SMA, roughly where my second level is at 847.40. The HSI did cross above on Thursday, above that midline, but ultimately on Friday failed and broke below. So we're going to see if volume starts to pick up on Netflix, and that's the next level you'd be looking at 847.40. If volume comes in to the upside, the next level to break out is 921.35. There's an HSI dot rate test line around 928. Above that, then you obviously push for the retest of the all-time high at 941.75. Above that, more macro, if the market catches support and starts to flip long again, I am looking for Netflix to go to that PT3 target at 1033.65. That's going to be the level to watch out for. So in my opinion, Netflix, to me at least, still looks bullish should it stay above 900, and if you can break above 920, then that can be good signs that Netflix wants to continue pushing towards that $1,000 range. So definitely keep a close eye out on Netflix. Jumping over to NVIDIA here. So NVIDIA is struggling a little bit here. You do have this bearish white swan and deep crab on the daily. During the week, it started to look bullish for the semiconductors. They were pushing up. You can see that NVIDIA tried to get above that 50 SMA there. It did go as high as 141, but it was not able to hold it. And ultimately, that push that it got, you crossed that HSI midline and it went to the overbought conditions. And unfortunately, you did form an HSI arrow to the downside here on NVIDIA, which could suggest it may be another leg back down to create a lower low in this most recent downtrend here, right? Because you are creating here lower lows and lower highs. So if that is to be the case, you can see maybe a lower low down the line. Should you first lose 133.05, I do have a level there before that at 132.66. So lose that level. The next level you're looking at would be 126. And then the HSI dot retest line there around 121, roughly where the PT3 there is at 121.20. And target 2 is at. You do have a gap to fill towards 119 and change, just slightly above the 200 SMA. Targets to the upside you want to reclaim for NVIDIA to get bullish again is to reclaim that 140 target. HSI dot retest line, there's our 141, 142. I have a level there at 144.71. Should you break that, this is the last time when you try to get above that, you kind of created that lower low that we just got. So we want to get above 144. Then ultimately you can see the previous all-time high retest around 152, and then make a new all-time high at 154.38, and then hop there for that type return. The type 2 return towards hop at 163.09. If we go over here to the weekly, you do have this bearish dragon pattern where it is holding support above BC there at the 886 of the pattern at 135.02. So as long as it can hold that above that, maybe you can consolidate there and then go towards that OPR at 154.38, which is giving confluence to that OPR there on the white swan on the daily. So right now the semiconductors, NVIDIA specifically, having a little bit of struggle, still holding well support above 132, which is what you want to see. Ultimately, it's fine to stay within that range. I do have that range between 144 and 132 that I like to stay in. If you fail that 132 range, then you could be a little bit more bearish towards 120 and change. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here. So Bitcoin, we're still tracking this bearish crab pattern on the daily. You can see that hop so far is now the level of resistance for Bitcoin, which is at 96.1K. Ultimately, a lot of people are tracking what looks like a head and shoulders here, right? You have the left here, head, and the right shoulder. That neckline is currently that 50 EMA, roughly around 93, 90K. Below that, then you can come back to that terminal bar around 89.5K. There is an HSI dot retest line around 90K, so that's the next level I'm going to be watching out for. You did come and wick down a few times like you did back here in early December towards that 90K, but found support. You also had a test at 92K, found support, climbed back up, and you had hit another time again 92.5, and you're just trying to hold on above that level. The moment you fail that level, then maybe you come again towards test at 89, 90K. Below that, then you obviously would start the type 1 reaction towards T1 at 76.3K. Still too early to call that. I think the most important level to watch out for Bitcoin, if it is going to start a type 1 reaction, is the terminal bar there. The terminal bar is at 89.5K. Just call it around 90K. You lose that level, then you can start looking a little bit more bearish on Bitcoin. Targets to the upside here, if it manages to hold this level and validate that head and shoulders, and you can look back towards 96.1K, and then ultimately go back to 101K and retest all-time highs. And I do have a target next there for a new all-time high down the line if it manages to find support above here, is around 113K. If we go over here to the weekly, we did form that HSI arrow last week. You did come and close so far below that. Right now we have about 9 minutes left, so it looks like you are going to get that close below previous candle close on the weekly, but it is off of low volume. So that is also finding support just slightly above the HSI midline on the weekly, but it is coming down to test that level, which could be towards that 9 EMA on the weekly, which is at 91.4K. So we'll see if this is just consolidating here on crypto. If it does consolidate here, that'd be fine. You're looking to invalidate this formation that is currently in. So definitely keep a close eye out on Bitcoin. So that is all I have for you guys. I will be streaming same time as always from Monday to Friday from market open to market closed. Obviously, I won't be streaming on Wednesday because it is New Year's Day and the market will be closed. But if you're interested in catching me stream, link to my Twitch is in the description box below. Having said that, guys, I hope you guys have a good rest of your Sunday, and I will see you guys bright and early tomorrow. Take care, everybody, and peace.